Good morning. Hello, Kiran. Good morning, everybody. Good morning. Good morning. Good morning, Rudra. Good morning, Sachin. Hello, Vijit. Good morning, Abhinandan. Abhinandan is calling in from Florida. Okay. Must be late night for you now. Good morning. Hello. Good morning, everybody. Good morning. Good morning, Sumit, Saurabh. Good morning, Nupur, Anil, Mani. Namaste. Very good morning to all of you.
Good morning, everyone.
Good morning, Dharani. Thank you. Good morning, Kiran. So we will essentially be going through the monthly report here, uh, a roundup of what has happened in this month, go over some sectoral analysis, and also, try our hand at, what we think is coming. Also, we'll go over a Q&A session with you. So I'll just take 10-15 minutes in the starting to give you the introduction to this monthly meet, and then we will open it up for your questions. That is the primary aim, that we be able to answer all your queries. If there's any doubts, queries, procedural issues, any difficulties, uh, you can just share it here and we'll try to uh, address it right now. Or if we need more help from the platform, etc., we can always go back and do that also. So we will just start now. I think we have a good number of folks already in. So the title of today's presentation is All Time High Soon. It does look like that the market has regained good momentum, although the last couple of days have been a bit soft. But nevertheless, if we see that the broader part of the market is extremely strong, and we can, I'll show you some charts on the small caps and mid caps, which have, belied the slight softness in the leading indices. So Nifty, Bank Nifty have been a bit soft in the last few sessions, but over the last month, I think we have done reasonably well. So we started the month uh, uh, somewhere near 18,200, and now we've closed it at 18,500 odd. So this move has been good. We are now getting very close to the all-time high here at 18,800 and about. The uh, small cap index, however, has really gone ballistic from 84, 8,500 levels to 10,000 uh, closing as of yesterday. For the month of May, also, it did quite well. And now I think it's just a matter of time, probably, before we retest the previous high and possibly go higher also. So this entire phase, if you see, I think we have a longer term chart. Yeah. So this entire phase of the last, you can say, year and a half, since September of 21, is essentially just digesting these gains that had come around within a matter of 18 months. So even if you see from pre-COVID levels, 5,200 levels, we are almost doubled over the last few years pre-September 21. So whenever the market is going to go through, such extreme moves in a very short period of time, it will then try to consolidate and correct and digest those gains over the next few quarters. We've taken now 5 or 6 quarters, and it does seem like that this correction that we had till June of 22 was the corrective phase after this rise, and since then we've started on the new leg up. So this was the first leg up, and that has corrected, and now the new leg up has started in the direction above. This also is looking like a flaggish position which can really take it forward. But the only concern here is that uh, some of the small and more of nano cap stocks, some of them have become already some little bit overbought, red hot in some cases. So some cool off will surely happen, but even if there's a cool off and a retest of this breakout and then we go up again, that is fine, not an issue at all. Mid caps also similar story, where this entire rise was consolidated and digested over this about 16-18 months period, and then fresh new breakout has happened above this. This is a very very strong chart if you ask me. We will only sort of begin to worry about this chart below, let's say, 29,000. So it's a very strong chart from a perspective of medium term. And also, because of this consolidation, what has happened from a fundamental point of view, although we don't have that consideration for our strategies, but from a global perspective as to how most people look at the markets, is that what valuations we had sitting here, we've now allowed earnings to catch up in the last 18 months, and hence the valuations have become more rational over a period of time. This combined with the fact that the US has cleared the debt ceiling till 2025, and now that the runway of more debt, more money creation is open, the same what has happened in the past may continue. Although we have the headwinds of inflation, we have the headwinds of a recessionary outcome there, but now the tools with the Fed are there to address that recessionary phase with more liquidity and pumping. Although it will result in inflation down the road again, but that is another subject. So for now, there are no restraints as such, and that's what we have seen in the US markets in the last few sessions, zooming up, and that is going to create more liquidity flows everywhere. The dollar index, which we were watching last month also, which at least I thought that a head and shoulders pattern was making and it was about to break down here, but it did not, has bounced again, but now has sort of looking like that it may come off. If it does come off, that will be really good news for emerging markets and precious metals. There is a inverse correlation of moves when this happens. So while the dollar index was rising, Nifty has not fallen. So this is extremely, indicative of the strength of the Indian market right now. Because usually you will see that whenever there's a steep rise or a strong rise in dollar index, the Nifty or emerging market flows tend to become flat or negative. But it has not happened this time. So it does seem like that the market is on a good footing going forward. If we take a longer view of the Nifty, I mean, this is an annual candle for each year. I mean, I think the run that we've had in the last 8 years, with 2023 as the current running year, is a positive run on each subsequent year. This has never happened before, actually, that we had eight positive years. Of course, we had a very volatile 2020 during that, and somewhat 2022 also. But to have eight plus closings on a yearly basis is quite a feat. So this is somewhat, you know, also saying that the world is kind of in a different place, especially since 2008, where money is getting thrown at every problem. If there is a slowdown, throw money at the market. If there is any other issue that happens, throw money at the market. So this asset inflation, because of increasing money supply, if you keep increasing the money supply, obviously all assets will tend to keep going up on only, and create that inequality between asset holders and non-asset holders. But all assets continue to go up solely by the virtue of the fact that more and more money is getting printed all over the world. So this, I think, is very indicative that there is no other solution that we have now. So the world is getting more and more indebted, and the world keeps on printing money, and assets keep rising. The only thing that we have to see essentially at the end of the day is that we should be beating inflation. And of course, while the government calculates the inflation figure, but each person will have their own inflation index or inflation calculation. And as long as we are beating inflation in a good way, I think we are doing all right. So this formalization and financialization of people and money which was not in the market also has gotten a great fillip in the last 5 6 7 years. And I think the market is in for further appreciation and good times. We've consolidated well in the last year and a half or 2 years also, and I think there is time now. And also the election year is coming up in the next May. Usually, you have seen that markets will not fall into going into the election unless the outcome is expected to be negative. Let's go forward and see the benchmark and strategy performance. So this is how the benchmarks had performed in the last month. So small caps up 6%, Nifty Next 50 up 6%, mid and small cap up 6%. Nifty has been muted at 2% versus the larger part of the market, CNX 200, CNX 500, nearly 3%. Within the weekend investing strategies, the performance is here. Some strategies have outperformed, some have underperformed. The current mix of strategies that you may have some outperformers, some underperformers. Over a period of time, however, we have seen that most strategies are able to perform by either in a lumpy way in some 1 year and then not perform in the next couple of years. And that's how this has been going. For instance, MI20 performed brilliantly in the month of April, but this month it has been stagnating. Similarly, MI80H2 is a classic example where the entire first year, going from August 21 to August 22, was negative and flat, whereas the next 9 months have been extremely good in MI80H2. Similar with NNF10 also, where it was hit in February and March, but has made a strong comeback at 8%. MI50 remains, one of the enigmas of the market, if I may say so, because most people you will meet will say that don't invest in strategies more than 15 stocks, 20 stocks, and if you are investing in 50 stocks, you will never make money. But MI50 has consistently breached that myth that even with 50 stocks you can really do very well, because we are dealing with small and mid cap stocks, and because of the diversification, any one stock is not able to do any major risk to the strategy, and it is able to pick large winners over a period of time. So this is something that uh, one can look at. In terms of quickly, I'll go through some sectors because I've already taken 15 minutes of my allotted time here. So commodities are looking still quite good. You can see the chart. Again, consolidation is there and it is heading towards re-challenging the previous high soon. So I think commodities remain good. Real estate has constantly been breaking out since 2021. So I think real estate is doing well. We are seeing anecdotal evidence also on ground of great sales by many of the listed players. So this is definitely something to track in case you're doing your own methodologies on sectors. Metals have been flat, but again, it is all dependent upon how China is performing in terms of metals globally, and there is some stimulus being given to property markets there that may cause the metals to go up. But as of now, they look a bit flat. Autos are doing extremely well. You can see autos made a new high in 2022, and after consolidation, it has broken out towards the high. Two wheelers are now doing quite well. Four wheelers are also doing well. We have seen good traction in most numbers that we are seeing here. FMCG remains the best of all sectors, going very very strong up, and you can see that the chart is amazingly linear. Although right now it does look like it's gone up a bit too much in a very short period of time, but still looking very very strong. Public sector enterprises have broken out after 15 years, so there is definitely a great change that is happening in public sector enterprises. Maybe they're becoming more efficient. Maybe they're the uh, redundancy is being reduced there. Maybe the government is actively also looking for strategic investors to come in. So the valuations are also going up. The public sector enterprise are seeing a rally that they have not seen since 15 years. So this entire range is getting challenged, and if this sustains, this really going to go very very high from here. Energy stocks are not doing so well. So we can see that what the drop that happened in 2023, and then there was a bounce, and this looks like that it wants to go down further. So this is somewhere which is not looking very promising. Pharma is looking a bit promising, but pharma has had a very long history of underperformance. So only if it starts to break out and sustains can we really see some gains there. IT, after the drop in 2022, have been range bound. This is primarily large cap IT. There are mid cap and small cap ITs that are doing extremely well. So this is large cap IT which is stuck in a range. I would venture to think that it will take some more time for consolidation before starting to go up. You can see all these sectoral rankings here in this chart. Real estate has done the best this month at 10%. Autos have done 8.3%. FMCG 7.4%. So on and so forth. The losers this month have been PSU banks and energy stocks. FMCG has been performing all through the year. Autos also almost all through the year, and you can see the relative ranking here going on. Uh, I've already mentioned about MI50. So MI50 has done extremely well. This is the 1 month chart on this, and I think we can now open up the forum for questions. So just type in your questions in the comment section. It could be any question. It could be regarding strategies. It could be regarding the platform. It could be regarding procedures, any issue that you may be facing. Uh, so this is something that is totally open right now. You can basically ask anything. Money has this question: what is the benefit of rotational momentum over absolute momentum when the market is in a downturn? It's a very good question. So let me first mention that we have a equal number of rotational and absolute momentum strategies. So most of the earlier ones, MI25, MI30, MI50, MI all cap, these are all absolute momentum strategies which go to cash also in terms of extreme market drawdown. And there are rotational strategies like NNF10, India Top 10, MI30, MI35, MI20, Evergreen. These are all rotational strategies that stay with fixed amount of stocks in the portfolio, and the stocks only rotate. They never go to cash, but they only rotate and they go to the strongest part of the cohort that you're tracking. Uh, so now these are two different styles of momentum investing. The first style, the absolute momentum style, has an advantage that whenever there is deep crisis, it will go to cash and stay in cash while the stocks go much lower. And then once they start to come back, it will start to allocate again. So that is the advantage of absolute momentum. Rotational momentum advantage is that it will keep rotating the stock. Even if all are negative in negative territory, it will still go to the the least damaged and the most strong stocks within that index that you are following. And whenever the market comes down and goes up, there is no lag. So the stocks are already allocated, and as the market starts to go up, the strategy also goes up with that. So absolute momentum has a disadvantage that there is a lag in terms of when it starts to allocate, once it goes to cash and comes into allocation. But the disadvantage with rotational is that once it goes down, and the market keeps going down, you will always be allocated. So if there is a deep crisis like 2008 or 2020, then you will have some losses, deeper losses in rotational, but the recovery also will be at without a lag. So there are two different sort of approaches. There is no right or wrong answer here. I mean, these are just two different approaches. Both have over a period of time delivered very well. What has happened in the last few years is because we've been very stagnant or range bound without deep losses. So what has happened is that rotational has done better in the last year and a half because there are no deep losses, and hence the absolute momentum strategies are sort of were either sitting on cash or were not able to rotate much, whereas rotational strategies were rotating during these year and a half. So essentially no right or wrong answers, but I've given you a flavor of how they work. So if market goes into deep crisis, absolute will definitely do more better. But if market sort of starts to keep rotating in shallow markets, then possibly rotational will do better. Next question or comment I may say is from Kiran. We want daily bites in old format where you used to share sectoral performance, weekend investing performance, today's heat map, top gainers, and DB topic. So we are already, I think the existing format includes sectoral performance. It includes heat map, gainers and losers. We have not included because I think most people have access to a lot of information on the web which gives that data, but we can look at that again. DB topic we have every day. The only thing we are not able to give right now is the small case performances, because there is still some confusion regarding what the regulator wants us to communicate to our users or not. There is still there is debate about it. I've also heard that some regulation clarity is going to come soon, so we will we can wait for that. But the idea is that everybody should have all the information whenever they want to access, and hence if you go to the microsite, the small case site, or our website, or the weekend investing hub, all the information is available to you on demand for sure. So that information is something that is not kept from you. Next one is from Medhavi. He says, portfolio level CAGR is not being updated by small case. Please push them uh, to make it available. Portfolio level CAGR. Okay. So you are basically, the question is, or the comment is that if you have several different small cases, then to have the combined sort of CAGR or XIRR is on an account level basis is not yet provided. So I will definitely push for it, but I haven't really gotten a very strong feedback that they would be willing to look at this yet. Um, I would always suggest to you that you keep a track of your performance at your end also. So you could look at maybe the M Profit app that we introduced last week. They have some free versions also where you can upload your entire trade book, and it will calculate all this for you. Or you can go for the paid version also. I think it is quite reasonably priced. Uh, Next one is from Abhinandan. With regards to overall portfolio, how much of our money should be invested in gold? So again, I cannot act like an advisor due to my license constraints, but in general, I would say that my thesis has been that you must have, as you are as a goal, that you one must have, your age divided by 2, uh, as the percentage of net worth in gold. So if you are 25-year-old, you can aim for 12.5% allocation. If you are 53 years old, you can go for 26.5% allocation, and that allocation keeps increasing. But that is just my thesis. You may or may not want to believe me. I think INR gold has performed extremely well in the last many decades, and it continues to do so. There seems to be a good, hedging property along with everything else INR that we have. So this is the only asset which is dollar denominated. And suppose tomorrow we get a government that is unable to hold the INR in its place, like we are seeing in many of our neighboring countries, then only gold will save us there. So from that perspective, it's a must have in your portfolio. uh, Sagar says, what strategy in your small case will take care in sideways, stagnant, or sideways market? So I think we have had a sideways market for a year and a half, and rotational strategies have performed, better in these stagnant markets. So I think that should answer your question. Within the rotational strategies, MI20, MI evergreen, uh, MI35, all of these have done quite well. NNF10, India top 10 is lagging, but these other four have done well. Next one is from Bala. ATH user in 2021 stayed away from market from 2022 till now, planning to join MI20 or MI50. Any discount for old users to rejoin? Also, is universal product still in use for larger corporates? So universal products are there. In fact, we are going to enhance the products available in universal, because there's a lot of folks who are not enabled on small case. Either they don't use the small case enabled brokers, or they have larger corpus which they don't want to run on small case, or they want to have full control over the order execution. Whatever may be the reason, but the universal product suite is going to be relaunched, refurbished, and relaunched soon. And we will have a lot more choice in terms of what we offer as universal products. For the discount, etc., you can just drop us an email. Whatever is the current best offers, my team will definitely offer to you. Sumit says, what is the approximate time considered for the change in price of stocks for the all-time high strategies? And can you throw some light on the exit rules for the all-time high strategies? So Sumit, we unfortunately do not discuss the exact criteria for all-time high or any other strategy. That remains proprietary. But I can tell you that the strategies are using weekly time frame, and we are essentially looking at, if you look at exit strategy, like a lot of people think that exit strategy is something that is really some magic happening there. But we are using across the different strategies, very simple exit strategies, maybe a some indicator, or maybe some, look at super trend, for instance, that will give you a very good exit strategy for or any all time average to range, or some combination of some stochastics or moving average or MACD breaking down. Or even some people use some absolute percentage drop. So if a stock drops 20%, I'll get out. That kind of exit policy also can be used. So I'm sorry I cannot share the exact parameters, but this should give you a hint of what is happening there. MI Evergreen Babu says, if I wanted to add more funds to the investment, it is recommended to do lump sum or SIP. So again, it is very difficult to answer this, because sometimes when market is near a bottom, lump sums do very, very well. Sometimes when the market is running very hard, has already gone up, lump sums may become a big problem. So I think my sense always is that don't try to time your investments unless you really find a situation where market has really tanked, and and it's just an extreme situation where you will more likely than not make money than lose money. Unless you have that kind of a situation, which let's say March 2020 was such a situation, or in 2018 we had a drop, or at demonetization time we had a drop. Whenever you find sharp drop in the market, that probably is a good time to bring some lump sum. But in other times, I would prefer and recommend, you gradually bring in your capital in SIPs.
And also, they can refer to many daily bites we've made on SIP versus lump sums.
Okay, great. So if you can, Babu, if you can just drop us an email,
Yeah, yeah.
point these daily bites also to you. Okay, Saurabh has a question on real estate. So while this is not the forum for this, but I'll just say that again, there is no right time for any investing. Like if you look at the last 20 years of Nifty movement, yes, there were some pinpointed bottoms that the market made, but even otherwise, if you came in, at points where there was no euphoria, you would have made a lot of money. So, Gurugram, for instance, there is some euphoria in the market for sure. Things have gotten heated up. So again, it's a question of, if you are looking for one or two cycles beyond, so if you are looking to invest for 20 years, you can get in at practically any time. But if you're trying to time the market, that I want to get in and get out in couple of years, then maybe not. I don't know. I won't be able to really say. Uh, Abhinandan says, which gold should we buy? ETFs or SGBs? Gold for physical gold, like gold bars. So good question, Abhinandan. The preferred way of investments in gold is like, physical gold is like there at the top. Then you have SGBs, which is paper, but it is backed by sovereign. Then you have more paper, which is ETFs, which is backed by SEBI registered entities, which are audited. Then there is possibly, gold mutual funds, uh, and then there is digital gold also. So I think this is the hierarchy that I look at. You can have a combination of, the top two or three. If you are trading gold, you know that you won't hold it for too long, maybe gold ETF paper is good. If you want to hold it for a longer period, SGBs are very good. If you want physical security, you should want the metal in your hand, then there's nothing better than the physical. So this is how I would look at gold.
Look, also wanted to check with you. We've received few more queries on this. I mean, from your experience in case of SGBs, what kind of liquidity is there when someone wants to exit? So while it is very lucrative in terms of 2.5%
See,
interest.
this liquidity myth is there in SGBs. SGBs trade 5 to 10 crore rupees worth of SGBs every day. Last few days of volume I've seen. So for retail investor, it's not an issue. If you are a HNI who want to, buy in crores or sell in crores, then yes, it may take some time to offload. But for retail investors who may be investing few lakhs, there is no issue. Within a percentage of the gold price, there are enough buyers or sellers. So if the gold price is 6,000, then not even a percentage, even a quarter percent up and quarter percent down, you will find buyers and sellers. So
So
this
this
is
is
not an
irrespective
issue.
of the date of maturity, is it? I mean, even
Yeah,
if it is like several
this is
years
such
back.
a tight market that any seller who is willing to, give away quarter percent, half a percent, there will be enough buyers for that. And any buyer who wants to buy a quarter percent higher will have enough sellers. It is a myth that SGBs are illiquid. There are enough sharks looking at this to, make that small change in trading. Amit says, what should MI investors do? Put in more money or wait for small cap pickup? So I think MI20 has been doing quite well. Only in this last 1 month it has slowed down. So I think there is no reason for any worry as such. If I Let me just also quickly go see this uh, MI20 chart, because I don't think there is any reason for any concern in MI20. So if I look at this 1 year chart, MI20 has done 121 on this. In the last 6 months, it is even with the market. Last 1 month, it is lagging. Yes, last 1 month it has lagged. But we have to look at with small cap and mid cap. Anyhow, So, overall, I think it is still doing quite well over a period of year and a half. So don't look at very micro time periods. It will take time, but it will come back, because once the rotation happens, maybe some stocks that have not been exited yet will get exited, and you'll get fresh momentum there. Not an issue. Okay, next one is from Sandeep. He says, "Can you suggest good mutual fund in which SIP can be done?" I think this is out of my domain. I will not be, uh, having enough knowledge about which mutual funds to invest in. So I think if you put this up on Twitter and tag me, I'm sure a lot of people, other people who have a lot of information and knowledge about mutual funds, will be able to help you. Uh, Sachin says, in daily bites and good and bad ugly weekly report, can we please track max drawdown on trailing 3 month basis? This will help in comparing it with max drawdown in entire life of strategy run. Okay, we will take a look at it. If we find merit in this, we will definitely add it in the GPU at least, because daily bites may not make sense to track it on a daily basis. Amit says, are SGBs issued once a year? Where can I buy them from? Is there a secondary market? So yes, SGBs are issued many times during the year. RBI comes out with the circular, then stock exchanges also comes out with notices, and it is widely circulated in the media also. Uh, they are traded on the exchanges, so there is a secondary market. You should not, in fact, buy them from the primary market. They are available cheaper uh, in various secondary sales that are available there. MI20 has underperformed compared to Nifty small cap in last 6 months. What do you think? I just showed you the chart, so just wait for some more time. It has done well over the last year and a half, so no reason to worry as such. Okay, Chandan says, what happens if you die? Who will manage all the strategies and and new? Don't take me wrong. So I'm exercising on a daily basis. I go for a 5 kilometer walk and jog. I'm probably fitter than a lot of 35 and 40-year-olds. My BMI is very good. My resting heart rate is 44 or 45, which is almost athletic. So I think there is no reason to worry. I should be worried if what if my investors conk off, and how will that work out then? So no, don't worry about this. When the time comes, there will be a transition. Thank you, Binandan. Thank you. Pharma and chemicals are not doing so well. What should I do about it? Notion beep. So I think this is the whole premise of momentum investing, that we never come to this question that this stock or this sector is not doing well, so what should I do? This is the whole premise of momentum investing, that on an automatic basis, what is not doing well will get thrown out, and what is doing well will automatically come into your portfolio. So please consider coming into a momentum strategy which will take care of these kind of issues. But pharma in general, as I showed you on the chart also, has been marred with a lot of underperformance, lot of US FDA issues. So unless you have very core knowledge about pharma industry and particular stocks and particular niches that they are catering to, I think venturing into pharma is a dangerous one. Or you figure out an analytical strategy around pharma and chemical stocks based on momentum, etc., which of course will help you do well. Because I remember in the last 3-4 years, maybe 2017-18 run, we had so many pharma and chemical stocks that did really well in momentum. But then they faded out, and we kept out of them. And now I think we have some more, only one or two of them left in some portfolios. Uh, I don't know what Sagar says. I don't know what is the criterion selecting stocks and exiting, but after listening to your daily bites, framed my own momentum rules, started in August 22. As of today, I'm 18% up. Congratulations. I think you've done very well. You should do more research and offer your services to others. Others can also get help then. Nile says, should momentum portfolios use momentum indices as benchmark? You can do that. I mean, momentum indices can be as benchmark, but they are not popular at all. And usually what happens is that people who come into momentum are just not invested in momentum. They are invested in other styles of investing also. So they would want to have a common benchmark to compare how my momentum strategy is doing versus my value strategy versus my XYZ strategy. So if you have a common benchmark, only then you will be able to compare. But if you like for your own personal use, of course you can compare it to your benchmark. Nupur says, "MI top 10 has underperformed and Nifty 50 since inception. What are your thoughts?" So I cannot say that it has not. Of course, it has underperformed. My hope is that it will, cover this underperformance over a due course of time. There can be periods of underperformance or outperformance in many years in many of these strategies, and we have seen enough examples in the last 7 years that we have been in existence. The most recent example was MIATH2, which had bombed in the first year of its existence, but has come back very, very strongly in the next year of its existence. So I think just give it more time. There is no reason for the strategy to not work. But yes, as of today, it has underperformed. Ayush Jain says, which sectors are looking promising coming ahead and which might lose momentum? So I think sector analysis we have done when I was discussing the sectoral charts. So there's no point of repeating that. But yes, autos, public sector enterprise, and real estate, these are the three sectors which really look well, really look good. Metals, um, pharma, energy, these are the ones that are looking weak. Nitin says, what a time to join this stream. Great. I don't know what was the query there. How do you see small caps performing in the coming days? So as I showed you on the chart, small cap charts look extremely positive. Maybe a bit heated up right now. So there may be some consolidation at some point, but the chart for a medium term perspective has broken out. So until we lose that breakdown, I think we are going higher. There is no doubt about that. Hemant says, invested in 6 MI strategies. Is it a risk or should it be considered as well diversified? I think it's very, very well diversified, not an issue at all. In fact, instead of concentrating in 2 or 3 strategies, diversifying across more always helps. And your overall equity curve would have gotten extremely smooth. Still, I would think that, you can definitely compare it to benchmarks and want to consolidate in case you are repeating the style of stocks that you're investing in. For instance, you may, if you, in case you have 2 or 3 small cap oriented strategies, then maybe you can consolidate. But in case your quantum of investments is near the recommended limit, then there is no issue at all from that. Arham Jain says, can India markets deliver 12 to 15% in next 10 years? I think it is very much possible. While we can obviously argue on both sides whether it will or whether it won't, I think India stands in a very, very strong position versus the rest of the world right now. There is good momentum in our markets. There is good governance that is expected to continue for the next 5, 6 years. Um, I don't see a reason why we should not. I think there will come a point where that the kicker will come in that exponential curve, where your basic issues will start to get taken care of, and that will add exponentially to the economy. So I as a individual, I am very, very optimistic on India. And India growth, even the most pessimistic forecasters would say that India will at least grow at 5-6%. Very optimistic forecasters may forecast 8 to 10%. So if we can manage even 6, 7, 8%, and we have 6, 7% of inflation in nominal terms, you will get 12, 13, 14%, and markets will give you a couple of percentage more than that on an average on the indices. So 15% is something that I think you can definitely go ahead with. Next question from MS: PMS versus mutual fund versus AIF versus direct equity versus small case. What is for whom? I think for retail investors, mutual funds and small case are the place to go. Obviously, because they cannot go to PMS. PMS requires minimum 50 lakhs. AIFs require sometimes even 1 crore, 2 crores as minimum. Direct equity requires you to have good knowledge, control, and psychology to manage your investments. Uh, which if you have, you must do direct equity. But if you don't have, don't try that. Uh, I think a mix of some of these vehicles is good for most people, uh, but that is again an individual choice. Santosh says, thanks for the daily bites and analysis. Why have you stopped talking about small cases in daily bites? Give your insights. As I mentioned, there is regulatory issues regarding uh, performance issues, etc., and hence we are waiting for more clarity on that. Rishabh says, when we rebalance, there's a difference between the personal returns and strategy as a whole for that particular day. Can we study what is the ideal time for doing rebalance? So, what Rishabh small case does is that they take the open, high, low close of that day as and do a weighted average of that. So weighted average of open, high, low close is what they assume as your buy and sell. So over a larger number of rebalances, your buys and sells will definitely converge to that. So there is no reason for any uh, deviation from that in any way. So there is no one right time or wrong time, but just make sure that you do the same thing at the same time every time. I mean, I think that can be the linear the discipline that you can keep on this. uh, Notion says, how does a new company not part of index become part of the index? What is the criteria? I think I will refer you to the index, the NSE website, and that you will be able to find that information better there. Santosh says, in small case, auto renewal is applied, but your loyalty discount program will not work with auto renewal. Any solution around this? So, unfortunately, you are right that the platform has decided that auto renewals, all renewals will happen in auto renewal mode only. We did have quite a bit of back and forth with the platform trying to avoid this, but it seems that it is unavoidable. Right now we don't have a solution to this, but we're still talking to them. I'll let you know if uh, once we have that clarity. Uh, uh, how can a retail investor scuttlebutt on his own for his any listed company? I think I am not the right person for this. You should go talk to some fundamental investor who do this. So this is something that I will not be able to comment on. Swapnil says, when will MI all cap move? Approximately when will all cap? I really have no timeline to this. We are running the strategy as per the algorithm. In 2021, 2022, it gave 3-digit returns. Last year and a half, it has been extremely silent. I'm hoping that it will pick up very very soon. That's all I can say. But overall, I don't think there is any reason for doubting the strategy because it does perform once it does get into its mojo. Uh, we have one more question about real estate from Naveen. Will reality sector pick up in near term, although home loan rates are going higher? I think my personal belief and sense is that real estate is in for the long run. We have started a cycle which will not stop so easily. This is, I think, it is somewhat like the 2003 to 2013 type of cycle, which ran a decade. Um, and we are now into year one and year two only. So my personal sense is that because the world problems are such that more and more money will get thrown at those problems, all asset classes will have to continuously rise along with inflation. So rents are going higher, housing prices are going higher. I think there is no doubt about it. The sooner you can make a decision to buy, I think will do well for you. Um Okay, next one is from Ambrish. Gone through your free weekend investing course. It was fantastic. Thank you so much. Can you please guide how to learn more about building momentum strategies, books, or any suggestions? So I think we have several videos on our media page on weekend investing, which have good insights into how to build momentum strategies, what parameters to use, what are the and several books in the past have been recommended. Wes Gray is one, then David David Klenow is one, Gary Antonacci is one. These are some of the books which are very oriented towards momentum investing. You can read that. You can also read books on trend following, because momentum investing is like an extension or portfolio format of trend following. So you can read books by trend following from Richard Dennis. You can read about uh, Michael Cowell. You can also I'm forgetting one name. But yeah, I mean, there's lots of material out there which you can get this. Okay, Ayush Jain says, how can AI chatbot be helpful for investors taking investing decisions and reading data? Very interesting. I haven't really deep dived into this domain, so I will not be the best person to answer. But I think there are some people on Twitter now who are using some AI for extracting data and tabulating data and creating some knowledge base out of that. But I am not sure how to do this. Sai says, do you think going long on RE stocks will give you some advantage? So I think RE stocks are definitely in a uptrend. So look for places in that uptrend where you are able to get in a trade with a reasonable stop and a reasonable position size, and then just follow it. I think just buying and forgetting probably is not going to work here. But because if in case things go awry and rates go up like dramatically, then it will definitely impact the real estate. But that is what something that I don't think will happen. But obviously all strategies, all investments that you make must have some exit policy, some stop, something that should be there. Sagar says, how do you handle Saturdays and Sundays? You're being in market for 25 years, repeating same strategy. How do you handle boredom? So I'm not bored at all. I continue to look at different things in the market. I may not trade them, I may not invest them, but I definitely remain active, and I basically use the time during the day to learn more things about the market, because every day is a learning curve, even after 27 years. And Saturdays and Sundays are more chilled out, so I go for longer walks. I see a movie or something and just chill out with family. So this is what I do on Saturdays and Sundays. Uh, PSU banks are still looking good, as per Naveen is asking the question. I don't think they've maxed out, but again, I don't know. We should look at some cutoff below which you can say that it's maxed out. On the chart, it doesn't look like they've maxed out yet. Data Speak says, are we going to provide unplanned rebalances for one-off cases after Hindenburg report on Adani could have saved some drawdown by exiting Adani stock? So yes, after Adani saga, we have decided that in case we are going to have any extreme movement, we will be looking at some intra-week or intra-month rebalance. But we went back and retested the last 7 years. We did not find any other case. So this to date, this remains just that one-off case where things could have been, some drawdown could have been saved. Yes, I agree with you. Akash says, why is the subscription fees high as you only apply it once, start of the week or month? So I think the subscription fee varies from product to product. I think you can even go for products like MI20, where we are forced that we will keep the subscription fee very low. Please understand there's platform fees to be paid, there's GST to be paid, there's all kinds of expenditure to be there. So we really need to figure out how to make it cheaper, but below the certain amount that we have reached, I don't think we can go below that. So you must always see what is the cost to you in percentage terms, and accordingly choose a product where you, if you are able to invest at least 2 3 4 lakhs, only then you should go for that product that can bring your fees down to near 1% or even lower than that. So I'm down to 55 minutes. I'll be taking the last five questions. Uh, uh, so I think I'm just avoiding repeating the questions. So don't mind if your question doesn't get picked up. Shubham says the website is working very slowly. We will definitely take a look at this. Thank you for the feedback. If you can just drop us an email or something and tell us which pages you think have worked slowly, we will definitely take a look at this. Uh, Amit says, which small case can be a replacement of diversified corpus of large, mid, and small cap and flexi cap mutual funds? No problem for asking too many questions. I think MI30 is a good mix. MI all cap is a good mix. MI evergreen is my personal favorite, although it doesn't get into the small and mid cap, but it has the hedging of gold with CNX 200 stocks. So these are two or three different ones that you can make, or you can combine different small cases. For instance, MI20 is small and mid cap. You can combine it with maybe NNF10 and top 10 and get the entire spectrum. Or you could just take a pure small cap one like MI25 or MI35 and combine it with MI all cap or MI80H. So these kind of combinations are possible. Sagar says, in future, if I want to switch small case from one to the other, can there be a way? We will try to facilitate it. Don't worry. Let us know when you want to do it and drop us an email. Uh, Rishabh says, started sipping in some mutual funds. They were among the top performers but have slipped below. What should be the criteria to judge their performance or wait for the? So, as I said, for any strategy, whether mutual fund or small case or PMS or AIF, whatever it may be, please give it adequate time. Study the history of that particular product. Have there been instances where there were 6 months, 1 year, 2 years of underperformance, but there later they were able to catch it up? And most of these are discretionary products. So if the catch up happens in non-discretionary, I think that is a more robust statement to make. But in discretionary, if there is underperformance year after year, then of course it may become a cause of worry. Uh, Someone was saying they've completed weekend investing momentum course. So if you go to the our website, there will be a pop-up which will take you to the weekend investing course. We have a course that was done along with the Learn app, and that course is available. We are doing another course. We will release it shortly, and all these courses are available free if you come through our website. If you go through Learn app, you'll have to pay something. But if you wish to just see this course, you can look at
And
this.
also, if you go to our website, it's right there at the top. You don't have to wait for the pop-up also. It's there right at the top. You
Let
can
me
click
just
on,
also show it
yeah, click
if
here
I
to get
can.
access to our momentum course. That's there.
So this is
Yeah.
the link, the
Yeah.
top link that you have here. If you just click it, it'll ask you for your details, and you'll get the course link. Uh, any other question? Last 1 minute. Top three momentum sectors. I've already answered that. Any plans to bring PMS service? No, no plans yet. I believe that, and this may sound a little. What should I say? Different, but I believe that there is a requirement that nobody else can make money for you. So this is a bit on the spiritual side, you may say, but nobody else can make money for you. You need to be involved in that process, and even though you are just doing one click and rebalancing this, that is your involvement in the process. So my sense is that as research providers, we would like to stay that way and not become money managers. And there is no plan to manage money for others. But I definitely think that your involvement with whatever you may be doing, even mutual funds are just send the money and fill it, forget it, shut it. It doesn't work too well. But this one, because your involvement is there, can really I think get your energy into your return making. Uh, Nupur, last question. After the max recommended investment is there, does it make sense to continue to pay subscription fees for the small case when you're not going to invest in it anymore? No, no, no. So I think you're getting it wrong. If you reach the max recommended amount, you must at least continue to rebalance and use that small case to keep running it. It won't happen on its own. So you will need to keep running it. Beyond the recommended limits, you should look for diversifying and going into some other small case that can give you that hedge against your existing small case basket that you have. So I think a very good session. I think we got through almost all the questions. If some questions were missed out, I'm extremely sorry. Please drop us a mail at support@weekendinvesting.com with your remaining question. We will address that. Thank you so much for all your attention this Saturday morning. We will try to keep doing this every month. Keep addressing all your queries, and hopefully we have a great time ahead for all our portfolios. Thank you so much. Goodbye.
Bye bye.